Live from London, this is Bloomberg Daybreak Europe. I'm Oliver Crook. Here are your top stories. Deal deadline. President Trump warns Tehran they have 15 days to reach a deal. This as the U.S. military amasses more forces in the Middle East. Asian stocks fall as oil hits a 6-month high, walking that tightrope between war and peace. Plus, investors brace for U.S. PCE inflation, U.S. GDP, and a potential Supreme Court ruling that could strike at the heart of Trump's tariff policy. Let's get into the markets this morning, looking at where we are trading going into the last session of the week. We've got Euro Stoxx 50 up by 0.5 percentage point. You can see this morning giving back some of the losses that we saw yesterday across the board within Europe. The dollar index we're watching very closely, gaining yet again. We're up almost 1% over the last 5 days, really reversing that trend that we've seen in the dollar over the last year. Really, and Brent crude, obviously, very sort of top of mind for everybody as we watch that U.S. military amassment around the region. Brent breaking through $72 a barrel. This morning, we're also watching 7 a.m. today, UK retail sales. We'll also be watching, as we were mentioning, U.S. PCE, GDP, and of course, the possible Supreme Court ruling from the Supreme Court of the United States on Trump tariff policy. All that and much more. Let's get started. Well, a growing contingent of U.S. military forces in the Middle East is escalating tension in the region once again as the U.S. president ramps up pressure on Iran to strike a nuclear deal. President Trump has now signaled limits to the diplomatic process, setting a deadline for Tehran to reach a deal.
We're either going to get a deal or it's going to be unfortunate for them. I would think that would be enough time, 10, 15 days, pretty much maximum.
As ever, let's get some more from Bloomberg Horizon Middle East and Africa anchor Jumana Brzezinski. Jumana, once again, getting an update throughout the week. What do we know about this U.S. deployment and how Tehran is preparing?
Well, look, that 10 to 15 days comment is new and is what people are really latching onto in the last 24 hours. And really, it's Trump applying last-minute pressure on Iran to come to the table. This is, we talk about the huge buildup of military assets in and around the region. Just to give you the context here, analysts in the space say that the buildup of military equipment, ammunition in this part of the world is the biggest we've seen since the Iraq War, going all the way back to 2003. It actually dwarfs the buildup that the U.S. did in Venezuela earlier this year, and even surpasses that of what they had prepared in anticipation of U.S. Midnight Operation Hammer, which happened in the June War a year ago. So it does tell you that they're most definitely prepping for something in terms of those 2 aircraft carriers we spoke about. We've got missile destroyers, F-35 fighter jets, helicopters. Tracking sites are reporting that there's been a surge of flight activity out of military transport and aerial tankers as well. So yes, the positioning is certainly there. What we understand is that President Trump did have a meeting with his son-in-law, Jared Kushner, and with Steve Witkoff on Wednesday. He was briefed on the negotiations with Iran. And while they did say that there had been some progress, they're still very far apart in terms of getting Iran to agree to some of the concessions that the U.S. are asking for. At the same time, a U.S. security official has also briefed the Pentagon, saying that the military assets will probably be ready to go as of mid-March, which is probably why President Trump gave that 10 to 15-day timeline. And so the region is on high alert. You're seeing it in the price action in oil and even some equity markets today. And I would just caution as we head into the weekend that roughly a year ago, before that June war, President Trump had also given a 2-week notice to Iran, and then they struck a couple of days later. So at this point, really, all options are on the table. Ollie.
That's right, Jumana. And in tandem, we also have the president convening for the very first time the so-called Board of Peace. What came of that meeting, and do we have a clear understanding of what function this Board of Peace is actually supposed to play?
Well, the Board of Peace is ostensibly one part of the 20-point Gaza peace plan that the Trump administration unveiled a couple of months ago. The view is that it would oversee the reconstruction, the rehabilitation of Gaza, in addition to steering over a committee of Palestinian technocrats with the view of long-lasting stability in the region. But still, lots of issues. Number one, an issue of cost. The UN estimate that reconstruction costs alone in Gaza are going to top around $70 billion. Yesterday, a combined $17 billion was pledged from 9 countries for the reconstruction of Gaza, and the United States said that they would tip in another $10 billion, but that's still far off that $70 billion target, of course. The other bigger topic, and I would say the main one for Israel at this point, is the question of Hamas disarmament and over what time frame that is going to happen, and whether it is actually going to happen in the next couple of weeks. An Israeli official briefing also that they would like to see that happen over the course of the next couple of months. Otherwise, there's always the possibility of restarting the war again. And then finally, the question of the International Peacekeeping Force, the ISF is what they're calling it. Some countries have committed to sending military personnel to the Gaza Strip. But again, in the absence of that full disarmament, many countries are also quite reserved about sending troops to the region in the absence of knowing that they will be sent to a strip that actually is not under the command of Hamas. Indonesia, however, did say that they may send as many as 8,000 troops, so perhaps a little bit of progress on that front. But ultimately, it was a very much Trump-type event, a lot of fanfare, of course, and very noticeable. You as well would have noticed this, Oliver, the absence of many European nations who still had a lot of questions about the exact composition of this board of peace and how it plans to interact with the United Nations.
Yeah, exactly. And how expansive the ambitions for the Board of Peace might be going forward outside of the question of Israel and Hamas. Thank you so much, Bloomberg Horizon's Middle East anchor, Jumana Bersetchi, for the latest on Iran and the Board of Peace. Let's turn now to the oil market. We have seen a rise of 6% over the last 2 sessions over those tensions building between the United States and Iran. Joining us now is Anthony DePaola, our Middle East energy reporter. For oil, walking this tightrope between war and peace, where do you see as the ceiling and the floor for this commodity really going into this moment of intense uncertainty?
Good morning, Oliver. Yeah, as you said, we've seen quite a run up in oil this year, which is basically all that geopolitical risk put into the price there. We are probably pretty much at the top of a range of geopolitical risk that a lot of the analysts and traders that we've been speaking to have indicated something, as little as $3, as much as $10 of this kind of geopolitical risk, and that risk is there because of that build-up, the deadlines, the talks going, yes, positively, but going slowly. And if you just look at the last time that the U.S. and Iran reached a nuclear deal under the Obama administration, that took months in preparation. So a 10 to 15 day window to reach a deal is really tight. There's a lot of fine print, a lot of things to be sorted out. So Trump is really putting up the pressure. So that's really the risk that we're seeing in that price there. Of course, if we do get to the stage where there is an actual attack and there are missiles and bombs flying, then we potentially can see oil spiking up even higher. We saw prices jump in June in the brief war there when a facility, an energy-related facility was hit. It turned out to be very domestic focused, and prices fell back from that. But if we see a real impact on production or an impact on export capacity, then that could really spike the oil price even further than where we are now, while traders assess what the damage is, how much oil is going to be interrupted, and how quickly it could come back to the market. So what traders are really watching is Iran's own ability to export, Iran's own infrastructure, as well as any potential strike back by Iran, any retaliation by Iran, which could hit some of the other Gulf producers here. There's a lot of production, there's a lot of exports, there's a lot of assets in the region, and those assets can become targets in a shooting war. So that's what's really keeping the market on edge, Oliver.
Well, Anthony, thank you very much. Anthony DePaola, our Middle East energy markets reporter there. We should say that Brent trades at about $72 a barrel. Back in June of last year, we saw that reach almost $79 a barrel. So we're watching that very closely as we watch the buildup of U.S. Troops and equipment around Iran. Asian stocks are falling as the escalation of tensions in Iran also weighing on sentiment there. We'll get more now from our Bloomberg Asia Equities Deputy Managing Editor, Balazs Pence. Balazs, we did the oil story. How is this reading through into the equity story over in Asia? Good morning.
Good morning, Oliver. On the stock market, it was a continuation of the mild risk-off sentiment that we saw in U.S. trading it looks like these geopolitical headwinds taken together with the U.S. data coming up and the potential Supreme Court decision on Trump's tariffs created just enough momentum towards haven assets that some of these more riskier stocks saw a movement downwards. We're not talking about any sort of broad sell-off, just to be clear, but this is more a move towards safer assets. When we look for winners in this situation, one sector that stands out, as is often the case in times of geopolitical uncertainties, defense stocks, particularly in Japan and Korea. Names like Hanwha Aerospace come up here, or Kawasaki Heavy have done really well. And the other sector, off the back of the movement in oil that was just discussed, was the energy sector. We also saw some pretty significant gains there by names like INEOS in Japan or S-Oil in Korea. Woodside in Australia also comes to mind. So there are some winners in this, but broadly, it's a risk-off sentiment.
Well, Bloomberg's Asia Equities Deputy Managing Editor Balazs Pence, thank you very much for that update. And the dollar also gaining this morning on the Middle Eastern risk as the greenback heads for its best week since October, really reversing something we have seen for the last year. Let's bring in Mark Cranfield, Bloomberg Markets Live cross-asset strategist. Mark, how do we assess this move in the dollar over the last 5 days? Is this a sustainable move of dollar strength here?
It's probably not going to go too much further. If you think about where we came into this week, positioning across the board was very short US dollars. If you look at the CFTC data, which came out at the end of last week, it was some of the biggest short positions we've seen for many months, whether against the euro, against the yen, against the pound, Canadian dollar, a variety of currencies, and Australian dollar was in there as well. So people came in heavily positioned that way. We had the surprise from the Fed minutes. The minutes were much more hawkish than anybody had expected. They actually were discussing the possibility that they may need to raise interest rates. Now, some people are taking that with a pinch of salt, of course, because in reality, the idea that the Federal Reserve would hike rates this year seems a little bit stretched, but at least those minutes landed and it was a complete shock. On top of all of that, you have this move of US military hardware going into the Middle East, as we've been discussing, and that obviously is adding to the tension as well. Gives the dollar a little bit of a bid for the time being. It probably needs a lot more. For the dollar to sustain a bid beyond a few days, we need a lot more information. We need serious moves from the Federal Reserve to suggest they could actually increase interest rates. That is not really on the cards. So we'll probably see things calm down and the dollar start to lose its way again, unless we do get a surprise attack on Iran over the weekend. That's not the base case for many people, but let's see what happens in the next couple of days.
Yeah, Mark. And meanwhile, the Minneapolis Fed President Neel Kashkari has accused National Economic Council Director Kevin Hassett of trying to undermine Fed independence. That's also part of the conversation around the dollar. And that comes after Hassett criticized a New York Fed economist study, which found that U.S. companies bear the most of the burden from President Trump's tariff hikes. Kashkari defended the study, saying that research conducted by the Fed district banks reflect efforts to learn more about the economy. Have a listen.
I thought that Director Hassett's comments, though, he went on and he said that he disagreed with the results and the researchers should be punished or they should be disciplined for their conclusions. I think this is just another step to try to compromise the Fed's independence. Over the last year, we've seen multiple attempts to try to compromise the Fed's independence, including in December when the Department of Justice served a subpoena to the Board of Governors over some building expenses. It's really about monetary policy.
So the question around Fed independence sort of rearing its head once again in the context of tariffs. We may also get a ruling from the Supreme Court a little bit later today on the IEEPA, whether or not they are basically legal, the basis upon which Trump has imposed all of these tariffs. Well, how are the markets sort of viewing this event, and how much of a significant impact could that have, Mark?
I think on the whole, investors are hoping that they really don't have to respond to this at all, because they know that even if there's a decision from the court, that President Trump and the White House will probably respond with something else very quickly afterwards and just make it even more confusing than it already is. The bottom line is that the tariffs have helped to reduce the US trade deficit to some extent. US still runs a very big deficit with the rest of the world, but it's not quite as bad as it was a year ago. Now, if there's a decision that those tariffs have to be reversed, people have to be paid back money, and there are no more, that situation has to be stopped for the foreseeable future. Obviously, it could lead to a wider deficit in the next few months, and that will have a direct impact on the Treasury market. Part of the reason why Treasury yields have managed to stay relatively subdued is because people think that there's going to be some benefit from tariffs on an ongoing basis. You take that away, yields have to go up, especially at the long end of the curve. We will see curves steepening without the promise of tariffs down the road. But a lot of this is speculation, how the wording comes out, whether it can be enacted straight away, whether there's delays. There's too many imponderables. Traders will prefer not to deal with it. If they have to, they will probably sell long end of the Treasury curve.
Well, thank you very much, Mark Cranfield, Bloomberg's Mark Cranfield. There you can see the entirety of the Treasury curve. The yields higher this morning ahead of that decision, potential decision, we should say, from the Supreme Court. Still ahead, we'll talk to Andrew Puzder. He is the U.S. ambassador to the EU about the transatlantic relationship after it's been dealt a series of blows. More on the path forward after the so-called Greenland moment. That conversation coming up at 6:45 a.m. UK time. But first, Netflix promises more films in cinemas as it competes with Paramount to buy Warner Brothers. That's next, and this is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Netflix co-CEO Ted Sarandos says that the company's planned acquisition of Warner Brothers Discovery will lead to more films in theaters, addressing a key complaint from Hollywood. Netflix has promised to keep Warner Brothers films exclusively in theaters for 45 days, but Sarandos says that it isn't interested in putting that commitment in writing. He spoke to our very own Ed Ludlow and Lucas Shaw.
This deal is not complicated at all. It is $27.75 at plus the value of Discovery Global. By the way, it's the deal that they want. It is the deal that they asked for. These are the assets that were for sale. So the more complex thing is buying the whole company. When you do that, then you're buying these European sports networks. As you know, sports rights in Europe are incredibly highly regulated, as is the television landscape, which they'd be stepping themselves into. So I would argue that our deal is quite simple. $27.75 per share plus the value of Discovery Global. And which I think is an incredible asset, and they do too. That's why that they set the offer up this way. That's why when we were bidding, we bid for the assets that were for sale.
If Discovery Global is a great asset, I'm just wondering, have you guys talked about just buying the whole company and doing the spin yourself?
No, as you know, the linear broadcast business is not something that we're interested in, but others are. And I think when I look at the business, particularly those European networks are not in decline the way that the way they are in the U.S. So it is not of our interest, but it's I'm sure of interest of many buyers.
Ted, you are competing in a politically sensitive media deal. There is reporting and we are in a time where the Ellisons and their relationship to the Trump administration has been discussed. It's also reported, of course, that you met with the president, I think, on November 24th. How are you weighing that and assessing that in this scenario, that relationship between Paramount's leadership and this administration?
Look, I have spoken to the president about the state of the entertainment industry. We've had multiple conversations about how do we protect American jobs? How do we keep the entertainment industry healthy? What are those headwinds? What are those things that we're working on to try to keep production up in the United States? We are investing $1 billion into a new state-of-the-art production facility at the old Fort Monmouth military base in New Jersey. Obviously, the president is very keenly interested in entertainment, and he's very interested in American industry and American jobs. So those are the conversations that we've had. I don't know why the Ellisons intimate that they have some direct line to the Department of Justice for faster path of clearance. But I doubt that they do. This is a process that is being run by the Department of Justice. The president has been very clear on that. We've been very clear on that. The Department of Justice published in 2023 the guidelines for mergers that they are following right now. So that's what's happening here. This is a business deal, not a political deal.
So the co-CEO of Netflix there, Ted Sarandos. Now to some corporate news we're watching this morning. Blue Owl shares plunged in New York after the alternative investment firm says it will restrict withdrawals from one of its retail-focused private credit funds. The company says the fund will instead return capital through periodic distributions funded by loan repayments, asset sales, and other transactions. The move highlights the risk confronting retail investors entering into the fast-growing private credit market. The Financial Times reports NVIDIA is close to finalizing a $30 billion deal investment that would replace the long-term $100 billion commitment agreed on last year. The investment is part of a funding round that will value OpenAI at $730 billion. Coming up, as Anglo American prepares to report, we'll discuss how copper is fueling deal-making across and growth in the mining sector. That's next, and this is Bloomberg. An Anglo-American will be the latest mining giant to report later this morning in what's been a highly active time for the sector. Copper has been the star of the show on this earnings season. Let's bring in Bloomberg's metals and mining reporter Paul Allen Hunt. Starting with Anglo-American, what are we expecting after such a busy start to 2026, and we should say an intensely busy end to 2025?
Absolutely. Indeed. Anglo-American is coming pretty shortly. We're expecting a consensus net loss of 350 million, revenue of about 20 billion, 19.82. An adjusted profit of 710 million. There are lots of things that we're watching out for with Anglo. Of course, it was only a couple of years ago that BHP really had a crack at acquiring Anglo-American. Of course, that didn't come through, and instead Anglo-American is now pursuing a merger with fellow copper heavyweight Teck Resources. Anglo has flagged that there may be another write-down to its illustrious diamond business De Beers. That has been struggling in the current diamond market. We're also expecting updates on the coal business, which is another asset, along with the De Beers business, that Anglo is trying to sell. It decided to sell those assets after BHP made its approach to try and simplify its business and find some returns for shareholders. So that effort to restructure, to simplify, that's what we're looking for today ahead of its merger with Teck Resources. We're also expecting Anglo to benefit quite highly from the increase in copper prices that we saw over that second half there. Quellaveco and Collahuasi are the big copper mines, so it's likely to see some benefit from high copper prices.
Yeah, and talk to us a little bit about how those copper prices have been building the conversation around M&A in the mining sector very quickly.
Yeah, so mining businesses have all been trying to increase their exposure to copper. We've seen a lot of talk of M&A. BHP had its crack at Anglo. Anglo's now merging with Teck. Just earlier this year, we saw Rio Tinto and Glencore undertaking, these mammoth takeover discussions, but little has actually come to fruit so far. Copper prices went from about $8,200 a tonne at the start of last year. They crept up to 10 grand a tonne, and now they're 13 grand. The overall outlook for the metal that is key to electrification is soaring demand in the decades to come. Everybody's trying to get exposure.
Well, Bloomberg's metals and mining reporter Paul Allen Hunt, thank you very much for that. And a space we'll be watching very closely as we go further into 2026. And we'll be speaking to the CEO of Anglo American. That will be at 8:15 UK time on the Bloomberg opening trade. Coming up, we'll speak to Jane Foley, head of FX strategy at Rabobank, on where the U.S. dollar is heading. That's next. And this is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Oliver Crook with your top stories. Deal deadline. President Trump warns Tehran they have 15 days to reach a deal. This as the U.S. military amasses even more forces in the Middle East. Asian stocks fall as oil hits a 6-month high, walking a tightrope between war and peace. Plus, investors brace for U.S. PCE inflation, U.S. GDP, and a potential Supreme Court ruling that could strike at the heart of Trump's tariff policy. With all of that in mind, let's take a look at the markets this morning as we shape up going into the session here in Europe. Euro Stoxx 50 up almost 0.5% this morning, taking back, I should say, some of the losses that we got yesterday across the European equity space. U.S. dollar index getting a little bit of a bid this morning. 11.91 is what we're trading going into those tensions around the Middle East. And of course, Brent up almost a full percent this morning, breaking through that $72 a barrel, watching very closely as we appraise the situation in the Middle East and that military buildup with that deadline of 10 to 15 days set out by the President of the United States. Time now for your front page news, starting with the Wall Street Journal, which leads with Trump weighing an initial limited strike force to meet his demands for the Iran nuclear deal. We're also watching at The Guardian. King Charles says the law must take its course after the arrest of his brother Andrew on suspicion of misconduct in public office. And finally, in the Financial Times, its top headline, NVIDIA and OpenAI abandoning apparently that $100 billion deal in favor of a $30 billion investment as part of a massive new funding round for the AI startup. And you can get a roundup of all the stories you need to know to get your day started in today's edition of Daybreak. Terminal subscribers go to DAYB Go on the terminal. We are getting earnings now out of Danone. The fourth quarter like-for-like sales up 4.7% for an estimate of 4.4%. So that is a slight beat in terms of what we're seeing from Danone. This is a company that we've been watching very closely, in addition to Nestle, still dealing with some of the fallout from the baby formula issues that they have had. So that's something that is probably going to overshadow a number of, overshadow the earnings that we're getting in terms of the actual numbers, and waiting for commentary from Danone and as well as Nestle, which we got yesterday. Now, oil is trading next to near a 6-month high after President Trump issued Iran a 15-day deadline to reach a deal over its nuclear program. To increase pressure on Tehran, the U.S. military has amassed a vast array of forces in the Middle East, their biggest deployment since 2003 in the wake of 9/11. Let's bring in Paul Wallace, Bloomberg's managing editor for MENA. What kind of impact would a sustained campaign have on the region and oil prices? Obviously, we've been talking about this in the U.S. and Iranian lens, but there's a much broader conversation to have around the region.
Hi, Oliver. Yes, certainly. And I think it's fair to say that pretty much all governments in the region, or just about all of them, are nervous about what the U.S. might do. You could say Israel is a possible exception, that Israel seems to be the one that is most most aligned with the idea of the U.S. going ahead with the strikes. But even in Israel's case, they're having to build up their defenses to protect against possible Iranian retaliation against the country. For the rest of the region, the likes of Saudi Arabia, the UAE, they do fear that U.S. bases on their territory could become targets, and maybe even their oil assets. A lot of it depends just what the Americans do. If Trump decides to go for strikes, but decides to sort of make it a very short campaign that isn't about regime change, and he signals that to the Iranians quickly, then their retaliation might not be super aggressive. But if the Americans make it clear that it's going to be a long campaign, and essentially they want to overthrow the Iranian government and the supreme leader, then I think, in that situation, Iran could be very, very aggressive and hit out at, oil assets in the region, U.S. assets in the region, and Israel too.
Well, Paul Wallace, Bloomberg's managing editor for MENA, Economy and Government, thank you so much this morning. And amid that geopolitical environment, the dollar is poised for its best week since October as traders pare back expectations for Fed rate cuts. Here to discuss, I'm joined by Rabobank's head of FX strategy, Jane Foley. Jane, where should we start here? Let's begin with the dollar, talking about basically what's in the driver's seat here. In the short term, is it just a conversation about the geopolitics in Iran?
You know what, there's a lot of different layers when you look through what's driving the dollar, but I do think we do have to look at the safe haven aspect here, because for the last year or so, the market's been questioning, has the dollar lost its safe haven appeal? And yet, when we have the market positioning itself for potentially some sort of conflict in the Middle East, potentially this weekend, where we do see the dollar performing better. Now, the market is, of course, short the dollars, and that will, news of this type is likely to trigger some, sort of short covering. However, when we talk about what comprises a safe haven? Has the dollar still got its safe haven bid? Although that's a complex question, for some investors, it's going to be really quite simple. And US Treasuries, US dollar have liquidity. They have lots of liquidity. You can't replace that. There's no other assets in the market that can really do that job. And then I think there is a little bit of safe haven play coming through into the dollar this week, probably helped by those Fed minutes earlier in the week, which suggested they weren't perhaps as dovish as many people had anticipated. And of course, that brings us to a little bit of nervousness ahead of this afternoon's data.
And so what are you looking for in terms of that data a little bit later? So there's obviously this sort of short term, as you say, haven play for the dollar, but there's also this question about the sort of inflation narrative in the United States maybe not being as one directional as we think it may be.
Well, that's right. And you know, I think what's interesting about this right now is that we could be talking about a number of other G10 economies. In Australia, for instance, where they thought, or the market thought at the end of last year, they could be cutting further this year, and yet they've already hiked interest rates. Norway, more recently, of course, it's the same sort of pattern. And, you know, we're beginning to wonder, well, where is this sticky inflation coming from? How long is it going to prevail? Is this a similar story in the US? Will the Fed, you know, really be able to cut interest rates? And actually, should we be worried about this right now, because we're going to soon potentially get a different Fed chair, and does that sort of move the chairs around as well? So a lot going on, but certainly the market is and should be a little bit more cautious about the fact that there are members within the FOMC that do or are concerned about the fact that inflation is still above the Fed's target.
And I want to talk also about the geopolitics, not just in the immediate term for the question of Iran and what could be happening there, but more broadly speaking in terms of the sort of quiet rearrangement we're seeing in the FX market around broader geopolitics, and particularly when it concerns the dollar and the euro. We've heard a lot from European finance ministers saying that they want to try to fill some of the space that is potentially being vacated by the dollar. How realistic do you think that is? And does that invariably lead to a sort of stronger euro policy, even if by accident?
Well, I mean, we can see the reasons why, say, the Europeans want more autonomy, and that autonomy is not just in defence, but of course it's in supply chains, it's also in payment system. We've been seeing that news this week. And, you know, we can look at China and think, well, you know, they want more autonomy too. In fact, we can see this in a number of different regions around the world. And this is, of course, the theme of de-dollarization. But if we look back over the last 25 years, yes, that theme is there, but it's easier said than done. It's pretty difficult to move supply chains away from the dollar, away from US payment systems. Yes, there will be a push to do that, but it's tough. It's going to be slow. And at the same time, of course, we've got the theme of dollarization coming through, the US Treasury pushing back on that. And actually in regions such as Africa, for instance, the use of dollar-based stablecoins really meaning that dollarization is also an issue going on. So I don't think we're going to see much reaction to either of these forces in the spot price for a while, but these are big picture themes which are very relevant to the FX market.
And I want to ask you also on some of the stories we've seen over the last couple of days of the potential of a sort of resignation by Lagarde a little bit earlier to get somebody else in the central bank. We should say that she gave an interview to the Wall Street Journal saying that she was hoping to actually finish her term. So we'll see how that develops. But on this question, we've been talking so much about the Fed's independence and this idea of politicizing the Fed. Is there a risk of the politicizing of the ECB as well if we were talking about a sort of head of the ECB stepping out in order to basically put somebody in that wouldn't be influenced by, say, a far-right government within a European country, say France?
Well, exactly. I think the French presidential election will bring some answers to that. We have had some indications from the French far right that we may have a different point of view, certainly in terms of what the ECB's function should be. We have had indications that they may want to enliven again quantitative easing, which would not necessarily go down pretty well. But, you know, from our ECB watchers' point of view, this isn't just about the French presidential election and who might be the next head of the ECB. This is about the other chairs, the other seats that will become available over the next year or so. And for instance, are they going to be replaced by more hawkish members or not? So actually, I think 2027 is going to be a pretty interesting year for the ECB.
Well, Rabobank FX strategy head Jane Foley, thank you very much for your time this morning. Coming up, we'll talk to the U.S. ambassador to the EU about the future of the transatlantic relationship and where we stand after the so-called Greenland moment. That is next, and this is Bloomberg. Well, from Iran to China to the transatlantic relationship, it has been an intense year for U.S. foreign policy. Tensions between Europe and the United States reached their high point last month during the so-called Greenland moment, when the Trump administration indicated the U.S. might use military force to take Greenland before stepping back from that in that speech in Davos. The man who dealt with much of the fallout of that, no doubt, joins us now. He is Andrew Puzder. He is the U.S. ambassador to the EU. Ambassador, thank you so much for joining us from Brussels this morning. We had this sort of Greenland moment. Many in Europe felt that this was a fundamental loss of trust, that something had been broken fundamentally. How do you appraise the U.S.-EU relationship? And tell us about the kinds of conversations you've been having basically over those 6 weeks.
Well, I think it's improved a lot since Davos. We're working together on a critical minerals deal, which both the Europeans and the Americans recognize is essential. If we're going to go forward with an AI economy, we need to work together on that. We've got the trade deal coming up in front of the Parliament the week of March 9th in Strasbourg, and we're very hopeful that that's going to get passed and we can move on with the trade deal, which is so important to transatlantic prosperity, both in the United States and in Europe. And the Denmark, Greenland, and the United States are now negotiating a solution to what happened in Greenland. I think everybody's happy about that. I think people are ready to move on and ready to focus more on things that are going to have a material economic benefit going forward.
And I know that's something that you've been very focused on, whether it's on the trade deals, also this conversation now accelerating around rare earths. How do you see that evolving in terms of a point of overlap between the EU and the United States and trying to get sort of secure lines for those rare earth metals, particularly in the context of China? Is that something that you see progress being made on, and can you sort of elaborate on that progress?
Yeah, I think they made very, very significant progress at the Secretary of State held a ministerial in Washington, D.C. about a week ago. The European Union Commissioner Séjourné attended and made very, very complimentary remarks. The Secretary of State likewise made very complimentary remarks. All of the countries that were there realized that the West is going to be at a severe disadvantage if it doesn't have access to the processing and mining of these critical minerals on its own, where it has to be dependent on China. That's a huge supply chain risk. Everybody agrees on that. Now we need to come up with the agreements that'll solve that problem. And I have every confidence that the Secretary of State and our U.S. Trade Rep, Ambassador Greer, will be able to do that in the short run.
And also thinking about the trading relationship, there has been a few clauses added to the sort of European side of that, including the sunset clause for March of 2028. Do you think that that is a sort of an appropriate measure for the Europeans to have within their trade agreement with the United States, or do you anticipate that causing some problems?
Well, there were 5 amendments that were appended to the trade agreement in the committee draft in the EU Parliament. And the EU Parliament as a whole will vote on that committee draft the week of the 9th, and then it will go to a trilogue proceeding, or what we would, in the United States, we have a different name for that process, but it basically is where the European Council and the European Parliament come together. We call it reconciliation, they call it trilogue. And before I comment, I'd like to see what comes out of the trilogue, because I'm not sure which of those amendments will survive and which will be removed. Could be that they all come through, could be that they're all eliminated. We'll have to wait and see.
And I suspect many of your conversations on trade have been centered around the idea of steel and aluminum tariffs, still about those 50% tariffs, and also on the derivatives, something the Europeans have made no secret about wanting to dissolve and to reduce. How are the conversations going on that? Is there progress being made? And how explicitly is a deal on steel and aluminum linked to less regulation in the tech sector for American companies?
Well, I think Europe and the United States both now have 50% tariffs on steel and aluminum to prevent the dumping of steel and aluminum below market prices by the Chinese. So there's a joint interest in protecting our mutual steel and aluminum manufacturing capacities. On the derivative products such as washing machines and motorcycles, other products that may have steel and aluminum in them, my understanding is that the U.S. Trade Representative, our Commerce Department, and the trade reps here in Europe are coming up with solutions to that. We also have to deal with the carbon border adjustment mechanism, which also in effect puts tariffs or taxes on those same products. So it's a negotiation that's ongoing, but everybody's optimistic. Everybody wants a trade deal done. Everybody says a deal is a deal, so we need to move forward with this. The United States has done what it committed to do under that deal. We understand the European Union has a process it has to go through. It's going through that process, and we are anxiously awaiting the conclusion of that process.
And another sort of question I have is also on the tech space, and this is a question potentially about free speech. We heard from Emmanuel Macron a little bit earlier in the week using some pretty flowery language to describe the American position on that. But this is in specific around this idea of banning teenagers from social media. That is an initiative that is gaining a lot of traction around Europe. In your mind, is this separate from some of the other regulations that the Europeans impose? Is this something that is more about the welfare of children and adolescents in Europe rather than a free speech issue, or do you anticipate that this could generate some free speech conflict between the United States and Europe?
Yeah, I think people in the United States and people in Europe want to protect young adults or children from porn or other, grossly inappropriate content that may appear on various channels or various networks. The problem is determining whether or not that stated goal is actually something that's being used to suppress political speech, for example, or to suppress the speech of political parties that people might oppose or might not support, or to try and advance other interests under the guise of protecting children. But everybody wants to see children protected. The risk is that when you start imposing limits like this, that you go beyond the stated goal and try and achieve a political purpose, which we would not support.
And I also want to take you to some of the comments that we got from Secretary of State Marco Rubio around the Munich Security Conference. He sat down with Bloomberg and really sort of elaborated on how he sees the European and the American relationship. Have a listen.
The Vice President said last year very clearly was that Europe had made a series of decisions internally that were threatening to the alliance and ultimately to themselves, not because we hate Europe or we don't like Europeans, but because what is it that we fight for? What is it that binds us together? And ultimately, it's the fact that we are both heirs to the same civilization. And it's a great civilization. And it's one we should be proud of. It's one that's contributed extraordinarily to the world. And it's one, frankly, upon which America is built.
And Ambassador, I don't want to drag you too far into the sort of philosophical here, but I think there is a question that is arising between the United States and Europe about where those shared values are and where there is a limit to those shared values. Where, in your mind, do you think that the Americans and the Europeans still have those shared values, and where are they diverting in your mind?
Well, I think there's a number of issues that have come up over the past decade or so where we've got we've separated on how we approach issues. Now, immigration was one of them. The Europeans were handling it very differently than President Trump handled it when he took office. Now that's changing. The Europeans are making changes to their immigration system and coming more to the American model, closer to the American model. There's free speech issues in Europe. Europe views free speech differently than the United States does. We have our First Amendment. It's a very broad protection. We think that's important, but we particularly want to make sure that political speech is protected. You should be able to criticize politicians without any fear of repercussions, because that's the way people get ideas out. We think it's important to get ideas out. But I think for me, the primary divergence has been on economic issues, where the Europeans have pursued a decarbonization, more of a globalization type approach to these energy issues at a time when we're competing with China in an AI race, who's the first to get to artificial superintelligence. And we all need a maximum energy. We all need abundant energy, and that can include renewable energy. But we've got to put aside this almost religious tie to decarbonization, to destroying fossil fuel type energy production. We need to move forward from that so that we can meet the needs of an AI economy, while at the same time Europe reindustrializes. It's deindustrialized. We're at a point where Germany now has GDP per capita that's lower than the state of West Virginia in the United States, which is the 49th worst performing state, while Spain, France, Italy, and the EU generally are below, and the UK, I'll throw them in, are below the state of Mississippi, which is the 50th worst. Now, there are a lot of different ways to measure GDP, but that just shouldn't be the case, and I think we need to see some fundamental changes.
Well, U.S. Ambassador to the EU, Andrew Puzder, thank you so much for your time today. An interesting conversation about the future of the transatlantic relationship. Now, elsewhere, President Trump said he is ordering the release of government documents relating to extraterrestrial life. He accused Barack Obama of giving away classified information during a recent podcast appearance. In an interview, the former president said that aliens are real, but added they're not being kept in Area 51. Plenty more coming up, and this is Bloomberg. Here's a look at what we're watching for the rest of the day. 7 a.m. UK retail sales, and looking a little bit later in the United States. So a ton of data out of the U.S. We're getting core PCE. We'll get GDP data. And, of course, watching very closely that potential ruling from the Supreme Court on tariffs that may govern the fate of some of the linchpin of the Trump economic policy on tariffs. We're also watching very closely the oil market. We've been watching Brent over the last couple of weeks as we see the United States sort of amassing more and more military hardware in the region. As you can see, we're at $72 a barrel on Brent. We're still some distance away from where we were back in June when those strikes in Iran happened last year, but something we're watching very, very closely. And talking about PCE and inflation more broadly, the inflation narrative at the Federal Reserve clouding a little bit over after those Fed minutes came out yesterday. As you can see, the estimate here for PCE in the month of December, we should say this data was fairly delayed, expected to go up very slightly. So be watched very closely by the market and, of course, by the Federal Reserve. And we're also getting U.S. GDP a little bit later today. We're expecting that GDP figure to come in at 2.8% quarter on quarter, in a quarter in which we actually saw a net loss for non-farm payrolls, minus 51,000 in the fourth quarter. So what we have been seeing is growth expanding, but jobs cuts sort of cutting in, productivity boosting, i.e. what we've been calling the sort of jobless boom that's happening in the United States. We'll have much more throughout the morning. Of course, we still have a ton of earnings interview coming up. We'll be speaking to the CEO of Accor, the hotel chain out of France. The opening trade will be up next. We'll be speaking to a number of others, including the Anglo-American CEO at 8:15 UK time. The opening trade is next. This is Bloomberg.